Welcome traders. In this video we're going to go over the trades that I took on Friday, and we're going to take a quick look at what Bookmap was showing. Now when we look at Friday's chart, we notice that after the open we basically had the low being put in here at 29.30, and that was the basis for the trades that I took yesterday. And what was interesting was that the program Bookmap was basically helping with that level. On our Bookmap chart, what we see is liquidity throughout the day, and what we're interested in seeing is the liquidity coming into the market, or liquidity that was in the market, especially at the open, such as what we see right here. As price traded down to 29.30 the first time, we see all this liquidity coming in to support the price. Again, the second time, third time, and fourth time. And as you can see up here, when we made a high, they provided some significant liquidity up here and took price back down. Now, what was unusual about the price of 29.30 is information that is imported through cloud notes from a website called SpotGamma. And SpotGamma, what they do in the very simplest terms is track the open interest of options volume. And they have something called positive gamma and negative gamma. And basically when you're trading in the positive area, which would be the area above 29.30, the market is stable. And when it's trading below 29.30, because of hedging actions that the options dealers must do, if it were to trade below 29.30, the market would go into negative gamma and basically be unstable. So it wasn't much of a surprise to see that the level here of 29.30 was supported, and the 4 times that the shorts tried to push it lower, each time it was unsuccessful. They also had an open interest at a price of 29.50, which sits right here, and as you can see later in the day, the liquidity that came in to basically provide a resistance of 29.50 was also pretty significant. Okay, in looking at yesterday's trades, first trade that I did was about 9:45, and I had wanted to see what was going to happen at this 29.30 area. Was it going to be defended? So I got a pretty bad entry actually. My first entry was at 33 1/4. Price did trade back one more time to test, and I added at that point. So the average of the contracts was around 32, and I took them off for a 5-point profit at 37. You can see that the KP2 ratio wasn't the greatest on the first push down, but the second, third, and fourth pushes, the ratio was deeper and acceptable. And the ratio indicator was basically moving as expected. So that was a fairly good trade according to my plan. Now, the second trade that I took, again, like I mentioned in Thursday's video, there is a slight difference between price trading on the micros and the price trading on the full contract. So here what happens is I had an entry that on the micros goes up, forms a resistance zone, and comes back down. But we don't see that on the full contract. So that actually would have been a mistake if that had happened on the picture that I was seeing over here. And in retrospect, what I'm looking at is basically creating a rule that will address that. If we do have this 4 or 5 point move and it comes back to take you out, well, at that point we should probably be out of the trade couple ticks below what this previous low was. So I initially had that first entry there at 36, added 3 more contracts, and the average was probably around 34, and ended up taking that off all 5 of those contracts at 40.50. If you're wondering how I came up with 40.50 as a target, I used my 2-point zigzag chart here, and at 40.50 we were trading here at counter trend resistance, 1 tick away, and we were also tick divergent. So that was probably a really good, in retrospect, that was a really good exit for that trade. The third and last trade that I took was on the last test down right here. And as you can see, I only entered 1 contract here. And that was because I again made an error on the Superdome. When I was adding to the trades back here, I had set the quantity to 1, and I had forgotten to reset the quantity back up here. So I went ahead and I entered the 1 contract here, and price very quickly moved away, so I couldn't add to it. But as you can see what happens over here on the chart that I was watching, when we did get this pullback, I got a special divergence no supply signal, and I immediately added at that point. So I ended up taking that off at 29.35 for a average profit of about 4 points. And for the exit, I again used the counter trend zone that was printing up here at 36 for getting out at where I did. I do also want to note that there was an extremely good trade that I didn't take right here. We had a trend trade with distribution divergence and a 159 on the KP2 ratio. So that was clearly an error. What also made that a really good trade is that the blue line here is the mid between the high and the low. So the price of 36.50 was also something that could be used as a resistance area. So clearly a significant miss on my part right there. Later in the day, we had another good short trade with pretty much the exact same setup, a trend trade with distribution divergence and a very high ratio of 117. And here we had a strong trend long trade with an acceptable ratio that basically traded into the exhaustion pattern that we have right here and the no demand signal that we got at that exhaustion pattern. So in the last 45 minutes, we see that there was 3 or 4 significant trades that could also have been taken here. Now, one of the things that I want to address, and what I'm going to be doing the rest of this weekend, is looking at trades that could possibly fail. And here's a really good example. This is similar to the long trade that I had taken on Wednesday, where I'd entered the long trade went and became a strong trend, and I got very lucky by taking it off exactly at minor support, because market had only traded back to minor support and then resumed the trend, as in this case here. Also, as in this case here, what we note is that the market traded sideways for well over an hour. And what I had previously said in the other video also applies here. We had a really good ratio to start with, and this is something that initially could have been shorted. However, as you're sitting in this trade for over an hour, what you're watching this ratio just go sideways. And that is not what we expect to see. In all these other trades, what we're seeing is a V-shaped pattern, and the trade is being executed successfully. But here we have no V pattern. We have the ratio and price going sideways, and then they decide to do a stop run up to that resistance area at 29.50. So when we go and review the trade performance, we see that the day was profitable with a $257 profit. That of course does not include commissions, and for a total of 206 ticks. All of the contracts were profitable, and the average trade was worth 23 ticks. When we go back and review the last 3 days of trading from Wednesday to Friday, we see that the total profit, the total net profit was $841. And of course, commissions are not included there. And the idea was basically trading at about an 87% win rate. And of course, past performance is not indicative of future results. And again, what we're doing here is not providing trading advice. What we're doing is we're examining a trading strategy. And so at the end of the day, a fairly balanced win percentages between the longs and the shorts. 85% long, 90% on the shorts. And I can honestly say that in all of my years of trading experience, I've never accumulated such a large number of ticks in such a short amount of time. Now, what needs to be done is to complete the strategy by taking a harder look at the criteria for getting out of a trade and pulling it. And once that is complete, that is the time to be adding additional contracts and taking this to the next step, which is additional profits. But for a 3-day profit of $841, I am extremely pleased. So my goal for this weekend is basically to understand what not to get involved with. And what I'm going to do is I'm going to be adding a web page that will not only explain the strategy, but what to look out for. And this would be a perfect example. Thanks for taking the time to watch, and stay safe. Take care.